Hello everyone, welcome to the Bowtie Breakdown. I'm Garry Morin, and today the Bowtie Breakdown is on the road. We are here in North Providence at Sierra Pacific Mortgage. I am here with my friend Peter. Peter, welcome.
Hi Gary.
Thanks for joining us today. Pete is here to tell us about a very cool program out there for buyers called the 2-1 Buydown program. But Pete, before we get into that, can you tell us a little bit about yourself and your company here in North Providence?
Yeah, absolutely. Been in the business a little over 20 years. Been with Sierra about 13 of those.
Okay.
So I'm definitely seasoned in the business.
Oh, definitely.
Yep. Know all about the ins and outs of the mortgage industry, all the ups and downs, especially that we're going through right now as an industry. Hoping that we start coming out of this come springtime. That would be a good thing for everybody involved. So that's a little bit about myself.
Okay. So tell us about this program, 2-1 Buydown. Like, what is it all about and how does it work?
Sure, absolutely. So the 2-1 Buydown was pretty popular before we were seeing rates in the 2s and 3s. This program was out some years ago.
So it usually comes out when the rates kind of peak up?
Yeah, what it does is it's trying to, get those borrowers who are kind of on the fence, a little nervous about the rate situation, and it helps them kind of ease into the payment.
Okay.
So from an underwriting standpoint, we're not qualifying the borrower on the lowest rate, which we're qualifying them at the max. So let's say their rate today is 6.5%. With the 2-1 Buydown, they're going to be at 4.5% for the first year, 5.5% for the second year, and then they're going to ease into the 6.5% going forward. So it kind of gives them a little flexibility of getting into that mortgage, getting accustomed to making payments, and then it's going to gradually step it.
So it's not essentially a discount per se, but it sort of is for the first couple of years, I guess you could say?
Yeah. So how the program really works is it is a 30-year fixed, so it's not an adjustable rate loan at all. Okay. What happens is it's either a seller-funded program or it's a lender-funded program. It's more popular that the seller funds this.
Sort of like closing costs or something like that?
Yeah, it works as almost like a closing cost concession. So what'll happen is how it's kind of calculated is, it's a long story, I won't go into it all totally, but what happens is the difference in those payments, let's say at the 4.5%, the borrower's saving, $500 a month. So you take that savings times 12. Yep. And then let's say the next year, year 2, the borrower is saving $250 a month. You're going to take that $250 times 12. You're going to add those together. That's the sum. So let's say that's $10,000. That's what we need to get from the seller. Okay. That money is then put into an escrow account. So every month when the borrower is actually making a payment, they're sending in their minimum, but actually more is due.
And then it's getting drawn from that account?
And it's getting drawn. It's almost like an escrow account. Okay. So that money's going to come from there, and it's going to make up the full payment.
That's very cool on it. So is that very popular? I mean, obviously with the rates up there.
Yeah, it's getting popular, especially if you can get the concessions from the seller. There's also different variations to this. There's a 1-1, there's a 1-0. Oh, okay. We offer all three. There are some variations of it, but yeah, I mean...
It works the same way?
Works the same way, and so with the 1-1, instead of it being drawn down 2 points, it's drawn down for 1 point for 2 years. Okay. And then the 1-0, it's drawn down 1 point just for 1 year, and then you're at the full payment.
Okay, so you just answered my question. I was going to say, is it a 2-year thing or a 1-year thing? It's either 1 or 2 years, basically?
Yes, depending on which way they go.
Now, talk to me about credit scores. Is there like a minimum credit score buyer or borrower?
So we are looking for a minimum of 620, as long as they qualify for the program, and this is open up to pretty much everything. So this is going to be on your FHA, it's going to be on your conventional loans. Awesome. It's going to be on pretty much any fixed product.
So it doesn't matter which...
Purchase only.
It doesn't matter which loan they're using, they can still use this program.
That's correct.
For any type of thing on it. So very cool. Yep. Does it add any fees to the origination fees?
No, good question. No, it does not. So it's not any more expensive to a borrower to go this route. There's no difference to the rate. There's no difference to closing cost. The only difference would be is that difference in the payment. So that's something the borrower can't pay that at all. Okay. That's how this program works. So none of the money that needs to be set aside for this can come from the borrower. It either has to come from the seller or the lender 100%. The borrower can't contribute even $1 to the program. So it has to fully come from one or the other.
Okay. And the benefit of that, what is the major benefit for the buyer on this program?
The benefit really, it's getting the borrower to ease into the payment and to become comfortable.
Okay.
Because if you have a first-time client who's never owned a home before, and they're seeing rates now in the upper 6s, low 7s, depending on their situation, it can be scary.
Especially if that monthly payment balloons a little bit from a percentage or two.
More than they've been used to paying for rent. So the hope is, rates do go up, but they do come down.
Yep.
So we're hopeful that we will see a trend where now rates will start to come the other way, maybe next year, the year after, and it just gets people into the home. So now they can ease into the payment. Yep. And worst case, they know what their maximum is. It's not going to be more than that.
Yep.
But if rates come down and we can refinance them, we'll help them with certain programs to refinance and get into a lower rate, so they don't have too much payment shock.
You just touched on the next question I was going to ask you. Is this a program like they're locked in forever? It sounds like it's something that they could refinance if the rates go lower.
They can. There's no prepayment penalty on these. These are just a 30-year fixed mortgage.
Awesome.
So the rate does not adjust after the adjustment period, of course, with the buy down.
Yep.
But the rate it's a fixed program.
So what happens, now you told us that there's the year program, there's a 2-year program. So what happens when that money in that account runs out? Does it automatically switch over to the full payment for the buyer?
Correct. So what will happen is it's timed based on the program they pick. So if they do the 2-1 buy down, it's going to be basically 24 months payments. So there's going to be enough in there.
Closing.
Correct. So when that first payment's due, there'll be money from that through the 24th. And then after that, they're going to be into the full, just the regular.
So it's not a surprise, like, hey, all of a sudden your payment just shot up to this or something like that.
That's correct. And what happens is if they were to refinance before, let's say they did the 2-1 and then a year from now rates dropped and they want to refinance,
yep,
whatever is in that account will be applied to a principal reduction.
Oh, okay.
So that way they're not borrowing, because that money can't transfer. It has to be applied to their balance at close, and then they'll start their new loan.
So it's not like a use it or lose it type of thing.
That's correct. No. It's held and it's accounted for like an escrow account. So 100% of those funds are accounted for.
Okay.
And they'll be tracked from start to finish.
Good to know. Now, is this just a Rhode Island program?
No, this is a national program. So this is available for anybody, anywhere, in the country that qualifies for either a government loan or a.
So with me being licensed in Mass, Connecticut, and Rhode Island, I could apply this to buyers essentially in all 3 states.
That is correct, yes.
Good to know, buyers. Keep that in mind.
Absolutely.
So that was Peter Nasasti from Sierra Pacific Mortgage explaining the 2-1 buy down. I'm Garry Morin, and that was the Bowtie Breakdown. We'll see you next week.